Well, chaps, how's it going? So, what we're going to discuss today is a little bit more of an updated video compared to the last one on the 111 back ratio spread. And then I'm also going to show you the trade I entered today, which is a slightly different strategy. But I know on the last video with the back ratio spread, I fucked up. I had OBS cutting off the whole bottom of the screen. So, I was talking about the numbers of the trade and you guys couldn't even see it. So, that was a bit of a ball ache, but we're going to fix that here today. And then we're going to show you the new trade I entered to hedge our account out. Account's doing very, very well so far. The futures account is up 5.8k in the year, which is very nice. I'm really hoping the market sees a nice slow pullback because we can make absolute bank on a nice pullback with all of our hedge positions. That would be ideal, a nice slow grind down in the market. Similar to 2021 would be the absolute ideal outcome for us. A complete crash would be awful. A nice slow grind down would be perfect. And a flat or up market, we can make decent money. Like you can see right now, we're up 6k. We'd be up much more on the year if we had a nice slow decline. But that's besides the point. So let's get straight into this. So first of all, I'm going to show you the trade I entered today, because that'll be the first on the list. So what I actually entered today is I went into /ES E-mini futures and I went 36 days out, and basically I bought a put debit spread at the 4225 or 5225 5220 strike, and I then in the same trade I sold a 4150 put. So this more than paid for this debit spread. It actually paid me $63 in credit. So I earned $63 for taking this position. And the way this works is if we don't drop below these strikes, if we stay above 5225, I'll make $63 in a month on this position. If we close below 5220, if we end up anywhere in this gap, from here all the way up to here, I'll make $300. So it's a nice little hedge. And you may be thinking, well, what's the buying power requirement? This cost me $1,000 in buying power to enter. And you can see the delta on our sold put is 1. It's 0.01 delta. So over a 99% chance to win this trade. Okay, so I'm going to show you an option strat what this actually looks like, just so we can visualize it a bit better. If we go to here, what we can see is, now this is on SPX, not ES, so it's going to show slightly more credit, but the thesis of it is the exact same. So just pretend that when this says 94 right here, what it actually is 63. I've collected $63 from this trade. So what we can see, the current price is right here, and look how far back we would need to be to start to see a loss on this. If I go out the whole way, look, it's still, look, you can even see down here, 4,600, we're still at a profit. All the way down, we're now, there you go. So the loss is 21% pullback we would need to see in 36 days to start to see a loss. And then after this point, you've got your infinite loss. So I use a stop loss in these trades. If you want to know more about that, you can join my group and we can have a little discussion about stop loss and risk management. But you've an infinite loss after this. However, the market is just so unlikely that anything like this is ever going to happen. So that is what this looks like, and that is exactly what I've entered right here. So that's why I say ideally we want a really slow, nice little pullback. If we could just chop our way down over the next month and close below here, then yeah, we'll make $300 in this position. But this position is minuscule, absolutely minuscule in terms of some of the stuff I've got open and some of the money we can make on pullbacks. So let me get into the 111, or so that was a 111 trade. So you have you've got 3 positions open. You've got a bought put, a sold put, which is a put debit spread. So this is your put debit spread, and then way down here you've got one sold put. So it's a put debit spread and a naked put. So now let's get into the 111 back spread, and I'll show you the 112 back spread, and I'll show you this here, or 113 back spread. Sorry, I almost got that out there. 113 back spread. Okay, so now we've got the 1 to 3 ratio back spread set up, and let me show you how this differs. So now this is the position that I entered last week. That on the last video you couldn't see the numbers, so I'm going to go over the numbers here again so you can see what it looks like. So if I was to enter this trade right now today, I'd probably do something like this. So I'd be selling 3 of the 4,200 strikes, selling 3 puts, and then I'd be buying 1 put up around here, the 4,650 strike. So that basically, what that creates is 1 put debit spread and 2 naked puts. Now let me show you the numbers and then we'll get into the graph and visualize it. So what the numbers look like on this is a max loss of 22,570. Okay, that is if the market goes to, or sorry, max profit. Sorry, max loss is obviously $400,000. That's if the market goes to 0. But it's the same as investing into, you know, 100 shares of Nvidia. If you go into 100 shares of Nvidia, your max loss is $110,000 now. But no one's scared of that. But all of a sudden, when it comes to futures, we're scared of it. No, we use a stop loss anyway. So that's void. Ignore max loss. The max profit, on the other hand, is $22,572. And it only costs us $680 in buying power. Now, I would increase this buying power quite a lot mentally because this can expand. So I would dedicate between 1,000 and 1,500. So I can't speak today. I'd probably dedicate $1,500 to this trade in buying power just to allow for expansion. And we collect $73 in credit. So we get paid $73 if the market drops below 4,650. Our max profit starts between here, and we start to work up and work up and work up, and the profit gets larger and larger and larger and larger and larger until it reaches 22,570, which would be right here at this short strike. And then below that, we start incurring the loss. So let's have a look at our graph. Keep in mind, this is SPX again, so it's going to show $190 per credit instead of 73, so it's exactly double it. Well, it is supposed to be double it, but it's a little bit off just from the fills on option strat. So if we now look, this is what it will look like at expiration. So you would be, we're just going to call $73 in profit. No matter what the price is, you can see here's the price here, 5,250, and you can see when we zoom out, this is what this looks like. No matter where the price ends up above our strikes, we'll make our $73. Now here's where this gets interesting. If we have a market crash and it pulls back quite heavily, look at the way this works. We've now got this massive tent that will hedge us out. So if we see a big correction and it starts to go below 4,600, you will absolutely print money. So you can see right here at the top of this tent, it says $40,000 profit. But this is SPX, so on ES, that's about 20,000. So our broker tells us 22,000. At the top of this peak, we're set to make $22,000 if the market closes down at this price. And then our break even would be all the way down here at 3,900. And the 3,999 is our exact break even. And then after that, you've got the loss potential, infinite loss potential below that. But you can see how this works. So no matter how high we are, we keep our credit. But if we pull back, we get this humongous tent. That's why I say a slow grind down would be absolutely fantastic for me, because I have quite a few of these open in the account at the minute. You know, so that is the end goal, is we keep collecting this premium, bringing this premium in through the door and hedging our account out with dedicated hedges and hedges like that. So that's not a dedicated hedge. What that basically does is still collects us premium in through the door, which is why it still requires buying power. Now our dedicated hedges, I have a few dedicated hedges open right here. Here is one for toxic. So this one, I'm trying to find one, a good one that I have. Let me see. What's this one like? Okay, this is one of my smaller hedges, but you can see if the market was to close below 4,850, or sorry, 4,750, this would make me $2,200. So that's quite a small hedge. Obviously, it'll be nice if that happens. if we grind down and just start closing in these mid 4,000 range, I'd be so happy. I'd be swimming in cash. Now, if we go and find my larger hedge, here's one here. So this hedge, if you were to try and open this right now, it would cost you $270. So I paid about $270 for this insurance, and you can see it is giving me a max profit of $4,735. So if we come below 4,750 here again, that is going to give me a lovely, lovely paycheck, that. And I believe there is another one. Okay, I'm not going to sit here and look through all these positions because it's quite a lot, but there's a couple different positions like that. So I hope that gives you guys a better idea on how that works and the buying power requirements. It's not expensive. It's nowhere near as expensive as people thought. And if people are wondering what about that 112 trade that I took earlier, or sorry, the 111 trade that I posted in the Discord, well, I'll show you right now the buying power requirements for that. So you sell one of these, buy one of these, sell one of these. Buying power requirement is 1,200. So I was pretty spot on when I said the buying power earlier, and then the ratio back spread is significantly less. Alright guys, thank you for listening. If you have any questions, feel free, because I know this was a response to a question I seen in the comments. Also, make sure to check out the Discord. As you can see, we are up right now $10,700 on the year. It may look different on this. That is because this is my futures account. I do have some stocks, to be fair. I have just a couple of the miners that I haven't been able to get rid of yet. I'm waiting to get these pulled out, and then they're getting moved over to my stock account. So the one we're tracking together is the futures, because that is what I'm more focused on. But everything together, you can see our profit there on the group. And this is one contract per trade. And as you can see, here's a spreadsheet where I point out every different strategy and all of our wins and losses on it. So thanks for watching, guys. Cheers.